It's the midweek edition of Business Morning. Thank you for joining us. I am Bisi Adebayo. Oil prices are lower today after an industry group reported a surprise rise in U.S. crude, adding to worries about demand that led to a steep sell-off earlier in the week. Brent crude was trading down 0.5% at about $41.51 a barrel in early trade, and we saw U.S. crude dropping to $39.49 a barrel, down 0.78%. Now, we've seen surging cases of coronavirus infections, as well as the likelihood of more restrictions in Britain, which have renewed worries about fuel demand, just as more supply may come onto the market from Libya. In the United States, where the death toll from COVID-19 has passed 200,000, the world's highest, crude oil inventories rose by 691,000 barrels in the week to September the 18th, according to industry data, compared with analyst forecasts of a drop of 2.3 million barrels. Meantime, official data from the Energy Information Administration is due out later today. And bringing things back home now, the Monetary Policy Committee of the Central Bank of Nigeria has lowered the monetary policy rate by 100 basis points to 11.5%, while the MPC also adjusted the asymmetric corridor 2 plus 100 to 700 around the MPR. The Central Bank Governor, Godwin Emefiele, believes that a reduction of the MPR would put pressure on the deposit money banks to lower the cost of credit, and the cheaper credits will improve demand, stimulate production, reduce unemployment, and support the recovery of output growth. Let's take a listen.
In the view of the MPC, so far, evidence has not supported the rise in inflation to monetary factors, but rather, evidence suggests non-monetary factors, here we're talking about structural factors, as the overwhelming reasons accounting for the inflationary pressure. Accordingly, the implication is that traditional monetary policy instruments are not helpful in addressing the type of inflationary pressure we are currently confronted with. What is useful is the kind of supply-side measures currently being implemented. MPC also expects that a downward adjustment in monetary policy rate may be necessary to further put pressure on our deposit money banks to lower cost of credit in aid of growth. Committee's decision. In the face of declining economic growth and rising inflation, the committee faced a difficult set of policy choices requiring trade-offs and sequencing. Following the above considerations, committee reviewed the choices before it, bearing in mind its primary mandate of price stability and the need to support the recovery of output growth. Consequently, committee noted that the likely action aimed at to addressing the rise in domestic prices would have been to tighten the stance of policy, as this will not only moderate upward pressure on prices, but will also attract fresh capital into the economy and improve the level of the external reserves. It, however, noted that this decision may stifle the recovery of output growth and thus drive the economy further into contraction. On easing the stance of policy, the MPC was of the view that this action would provide cheaper credit to improve aggregate demand, stimulate production, reduce unemployment, and support the recovery of output growth. The committee, however, observed that with inflation trending upwards, easing of the policy stance may exacerbate the current inflationary pressure through an increase in money supply. In addition, MPC noted the tendency of an asymmetric response to downward price adjustments by other depository corporations, thus undermining the overall beneficial impact of a reduction to the cost of capital. In the committee's view, a hold position would allow the economy to adjust to the ongoing stimulus measures put in place by the monetary and fiscal authorities to curb the downturn and allow more time for the MPC to assess their impact on the Nigerian economy. After the consideration of the three policy options, members were of the opinion that the three options to lose will complement the bank's commitment to sustain the trajectory of the economic recovery and reduce the negative impact of COVID-19. In addition, the liquidity injections are expected to stimulate credit expansion to the critically impacted sectors of the economy and offer impetus for output growth and economic recovery. In view of the foregoing, committee decided to reduce the MPR by 100 basis points to 11.5% and adjust the asymmetric corridor to plus 100 and minus 700 around the MPR. 6 members voted to reduce MPR by 100 basis points, 1 member by 50 basis points, and 3 voted to hold. 9 members voted to change the asymmetric corridor, while 1 member voted to hold. All members voted to hold the CRR and the liquidity ratio. In summary, MPC voted to 1. Reduce the MPR by 100 basis points from 12.5% to 11.5%. 2. Adjust the asymmetric corridor from plus 200 and minus 500 basis points to plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5%, and 4. Retain liquidity ratio at 30%.
Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele. Now, to other issues now. Road construction in Nigeria has been a classic concern to everyone over the past 2 decades as poor infrastructure continues to disrupt supply chains and drag economic competitiveness. In a recent report published by research firm ProShare titled The Consequence of Poor Road Quality, it's estimated that Nigeria's poor road networks have dampened the annual gross domestic product by as much as $448.1 billion in real terms as at 2019 and $350 billion as of the first quarter of 2020. But what are the possible alternatives before the policymakers to address the seemingly unending infrastructure deficit? I have the chief economist and the managing editor of ProShare Nigeria, Mr. Teslim Chetabe, who joins us now in the studio to drill down on this issue. Good morning, Mr. Chetabe. Thank you for coming on the program.
It's a pleasure being here. Thank you.
Now, I'll start by asking you, what were some of the developments that led to this research report?
Okay, I think you attached some significance to the reasons behind the report when you mentioned earlier that it was adversely affecting Nigeria's GDP. Right. And GDP normally also comes with other consequences such as reduction in employment. And currently we know that we have a very young population that is unemployed. The unemployment rate is recently estimated at about 27%. Right. So we looked at it and said, look, what really can we do at the area of infrastructure to analyze the problems and challenges and see if we can come up with some solutions that will improve our construction system and at the same time improve employment, right? Because one of the largest employers of labor is actually the construction sector, right? Oil and gas is good, but it really doesn't employ so many people. There are a lot of value chains in the construction business. And that will assist us in reducing those unemployment figures. So we felt this was the right time to intervene in that space. Look at what is happening in road construction in particular, and then see how we can come up with some practical solutions that will resolve those road construction problems and at the same time improve our ability to produce. Production is adversely affected currently. I mean, it takes 48 hours for you to be able to clear goods from the Apapa ports. And that's massive, especially when you're looking at competition with other countries along the West Coast.
So what are some of the findings that you had in putting this report together?
Okay, the most maybe prominent thing that we discovered was that Nigerian roads are pretty expensive to construct. I mean, everybody has said it. The World Bank standard is that a kilometer of road should be about 238 billion naira. The average Nigerian road, I can tell you, costs much more than that, right? We're looking at about 1 trillion naira. And that's, in other words, we are about 4 times the World Bank's recommendation.
And so why is it so expensive?
Well, there are factors, and I don't like the expression Nigerian factor. I mean, let's put it as it is. Corruption is an issue that is global, right? It's not exclusive to Nigeria. But there is a corruption premium built into the cost of roads, right? And that has severely escalated the cost of construction. That's number one. Number two, there's the issue of the problems at the ports. Okay, so the problems we have at the ports escalates costs, and several other social factors also escalates these costs. And so, unfortunately, we are where we are. But can we do anything about it? That's where we come in and we say, yes, we can do something about it. And as we go on, we perhaps will talk about those things, because we're looking at, okay, can we use other alternative materials to bring down the cost of construction? Can we use other methodologies to bring down the cost of production? Can we finance road construction in a more creative manner to ensure that we bring down cost of construction? So those are the things we looked at, really.
Yes, indeed. You've talked about an alternative, and then your argument is that concrete roads are more durable than asphalt. Can you tell us more about that?
Yes. Traditionally, Nigeria has opted to take the route of using asphalt, bitumen, basically, processed bitumen with some aggregates to construct roads. And we said, is that the only way to construct roads? And if we use asphalt, what are the challenges that we typically see? I'm sure I had to drive to the studio this morning, and it was pothole laden. The whole route had several potholes. And I said, gosh, this is exactly what I'm talking about, right? One of the problems with asphalt is that it is not durable to weather changes, right? It has problems, especially if the sub-base, I don't want to go into engineering, but if the sub-base is not properly prepared and cured, then you're going to have severe problems with, especially in rainy climates where you have high levels of rainfall. Then you'll see that the roads become eroded very quickly. And unfortunately for Nigeria, in the process of construction, our sub-base is usually weak. And that's because somebody somewhere is trying to cut a bit of a corner, right? And in doing that, he compromises the quality of the road. And that translates into all the difficulties. Transport costs escalate because it takes longer to move from point A to point B. And all other things come in. Food prices in urban centers also escalate. So there's a variety of challenges that occur as a result of using asphalt. Is asphalt bad? No. I need to point out that very early. If you go to Garki in Abuja, we've had roads that are 38 years old. And those roads are quite good. And they're still motorable, okay? If you go to Wuse in Abuja too, okay? Area 1, 2, and I think 5. If you go there, the roads are quite good, very motorable.
How about here in Lagos and other parts of the country?
Well, that's a clever question. That's a really clever question. Yes, in Lagos, we do have some areas that have asphalt roads, okay, constructed, and they have proven durable. Perhaps not as durable as Abuja, and there's a reason. And the reason is the soil type, okay? It's soil type and topology. Now, topology meaning the curvature of the surface of the roads. Certain roads need to be prepared in a certain manner with asphalt for you to get optimal effect. But in any case, an asphalt road would perhaps last you from 15 to 20 years on average in a place like Lagos. But if you look at Abuja, it lasts much longer. Like I said, from 1982, you've had the Abuja roads, and that's because it's flat land. Okay, and of course, they don't have the extremities of rain that we have in the south. So those things are very important. When you're preparing a road, you're looking at what those of us who are chemists will call pH. I'm not a chemist, but those who are chemists will call it a pH, right? And now the pH looks at the acidity and alkalinity of the soil. Okay, so if you're going to have a very acid soil, you want to have road materials that are heavy on alkaline. And if the road is alkaline, then you want a bit of more acid to balance the road so that you have a pH of about 7, which is fairly neutral. Because if you don't have that pH, when rains fall, it adversely affects the quality of the road and corrodes the road faster. So you said Lagos. Lagos has major road challenges, no doubt about that. And that is why we're saying that in states like Lagos, in the southern parts of the country, we better start looking at alternative ways of constructing the roads with fresher ideas and concepts, such as what we've tried along Apapa to Ojota, which is using concrete.
Now, of course, concrete, now when you look at the cost of concrete and asphalt, which is more expensive, I believe that the concrete is more expensive. And you already mentioned that the costs of building these roads are, quite high. So how do we balance things out here?
That's an interesting question, actually. Let's look at it like this. I remember there was one ad some time ago on television, and it says, okay, if you're talking about the cost of education, then try the cost of ignorance, right? So it's like that. Concrete roads are going to be more expensive, no doubt about it. I think it'll be in the region of 10 to 15% more expensive than asphalt roads, okay? So definitely, from the get-go, you're concerned about expense. However, then when you're looking at it, you're not looking at the roads comparatively at a point in time, but over a period of time. Now, if we look at it over a period of time, we will see that it's actually cheaper. Why? Because a concrete road will take you for maybe 30 to 35 years. So you have an up of 10 years to 15 years on an asphalt road if you decide to use concrete. So if you look at it in terms of cost benefit, a concrete road, especially in the southern parts of the country, will take you much further at lower cost on average.
Now, Nigeria has three major manufacturers of cement who could provide, supply through for the concrete road construction value chain. And we have the Dangote Cement, we have Lafarge, we have Bois Cement. So what will patronage of these products from these companies imply for the capital market, for instance?
Okay, great. We've been complaining about our capital markets globally, as well as in Nigeria, haven't done too well in the last, let's say, half decade, right? Yes, if you look at it from the past, from 2011, it's actually grown 71%. But in the last 5 years, there has been a gradual slowdown in growth of the market. So if we decide to use concrete and the companies that you mentioned, the capital market will likely benefit majorly from this development. Why? Because turnover of sales will increase significantly for those different companies, okay? But for me, what is more important is that the quality of roads we get will be better. Now, because the quality of roads that we get are better, you're going to see that it's going to take you a lot shorter to get from point A to point B. And in Nigeria, we don't measure time. We don't really value a minute. So if you put a value to maybe an hour of your time that is saved over 365 days, it comes to quite a lot for companies and for individuals, right? So those kind of benefits come into the system from these three companies doing exactly what we hope will happen, increase their production and enable us to use concrete to manufacture or to create roads in the southern belt. And I keep emphasizing the southern belt because I think the northern belt might not do too badly with asphalt from what we're seeing in Abuja, as long as the engineering works are done properly. If they're done properly, we could manage asphalt. And why I said that also is that we have bitumen deposits in Nigeria. So why should we not use bitumen, for roads if we have the deposits, right? From Osun down to Ondo, Ogun, Lagos, there are bitumen deposits all over, so that's good. However, while you say that for asphalt, look at it from the perspective of concrete. If you go to Sokoto, Bauchi, Gombe, and the east, Imo, Ebonyi, then come back to the west, you're going to see Ogun State, Kwara State, okay, Kogi State, you're going to see heavy deposits of limestone. So that also creates a value chain multiplier by using cement and turning it into concrete.
All right, I'd like to thank you for sharing your time with us, Chief Economist and Managing Editor of ProShare Nigeria, Mr. Teslim Shitabe. Thanks for coming on.
It's been a pleasure being here. Thank you very much.
All right, well, we'll be discussing computer production in the Nigerian market with Zinox when we come back in just a moment. Please stay with us. Welcome back. Computer manufacturing company Zinox Technologies is known for its role in the single largest integrated ICT project in Africa in partnership with the Independent National Electoral Commission in 2010. The high-end ICT solution provider that prides itself as the first and only computerized digital assembly plant in West Africa with a daily production capacity of over 5,000 units has been divesting into other product lines lately and is here represented hosted by the Research and Development Manager, Mr. Onoche Chukwuma, to share with us some of the offerings coming from the only local OEM partner of Microsoft and Intel Corporation in the country. And he joins us from our studio in Abuja. Good morning, Mr. Chukwuma. Thank you for coming on the program. Now, your company championed IT knowledge into Nigeria through the Computerized Nigeria project. Now, decades down the line, can you tell us what's different now?
Okay. Thank you very much for having us. So, for we in Zinox over the years, we initially started from just computer production and manufacturing. So to really talk about what has fully happened over the years, we'd have to talk about a little bit about the brand and the vision behind it. Zinox was founded in 2001 by tech entrepreneur Dr. Leostan Eke with a simple but yes complex vision. And the vision was to change the structures of ICT in the country in the 21st century by promoting a knowledge-driven economy through digital democracy. And digital democracy we speak about here isn't only talking about elections. It's talking about the country having a technological voice that transcends just what you have with computers and laptops and solutions. And that is even much more important in the world we see today. We can see what's happening, trade wars that you see between the US and China, which is all about IP, intellectual property, and technology. We see sanctions being placed against a country like China from the US. And we are here thinking, if such sanctions come to a country like Nigeria, do we have a voice? Do we have a technological backbone that can actually drive and pioneer these solutions? If we are cut off from the rest of the world, how can we actually fend for ourselves digitally? Because for a country to succeed, it must be independent in its own technology. And for Zinox, we started in 2001 by just producing computers, the laptops and desktops. And we've seen different areas of growth and innovation that have taken us from just producing the computers and desktops to also going into full ICT production, full tech solutions, and delivering turnkey projects. Besides just computing, Zinox has also transcended into being an ISP, which is an internet service provider. We've also moved into the field of renewable energy by having our own brand of hybrid inverters, batteries, solar panels. We've now also moved into home and consumer electronics appliances by having our own range of smart TVs, power generators, electric kettles, toasters, microwaves, general home appliances. So we've moved across the years from just a company that was bringing out boxes to providing solutions across the full value chain. Besides ICT, we started developing projects that have been able to push the educational sector a bit. And when we started doing those projects, it was just about supplying computers. But we moved on from just supplying computers. We started building the structures by ourselves. We have a team of architects, we have a team of engineers that deploy these buildings and ensure they are up to code, that they can be fully used for the structures and the purpose which they have been made for. So really, across the line, we have moved from just doing the boxes. We now provide full turnkey solutions, and we have also diversified into sectors like renewable energy and consumer electronics and home appliances.
Now, in today's world of virtual learning, which has been brought about by the COVID-19 pandemic, what does Zinox offer Nigerians to keep up relevance in the League of Countries in ICT?
For virtual learning for you to have a good virtual learning experience, there need to be 3 full pillars for it to be completely integrated and successful. Zinox has been pioneering virtual learning and digital learning in Nigeria since 2004 with the introduction of the e-library project, the School Knowledge Center project, and the Tertiary Institution Knowledge Center project. And those 3 pillars, I'll first start from a platform. You need to have a scalable platform in terms of software that can be a virtual environment that brings in the teachers, brings in the students to fully collaborate online. That's the first aspect. And Zinox bring this through our partnership with Microsoft. With Microsoft, we're able to deploy O365 for education that comes with Microsoft Teams, which is the largest scalable virtual platform that leads to collaborations. And with Microsoft, we can be able to do that for institutions and can hold up to over 1 million people at the same time online interacting within the virtual community. And the platform is just the first step. The second step is you need to have smart devices that will allow you to be able to engage with the platform, and that's where Zinox really comes into play. We have smart devices that come up for different ages and different age groups. Starts from 3 years old with our Kids Legacy Tab series that is meant for introducing children to new vistas of learning. Moving up to the secondary schools, we have our ZPad tablets that come in either the 8-inch or 10-inch form factor that can be fully used to interact with the platform. Then we have the Zinox brand of laptops that come in very affordable packages that can be issued out to students. Then the third thing that ties everything together is internet connectivity. For you to be able to successfully interact with the platform, you need to have stable, usable internet that can allow you access the platform through your smart device. And what Zinox does is we've been partnering with institutions across the country. We're already in over 2,000 universities and secondary schools now. So what we do is we supply the platform with the smart devices bundled with the internet connectivity through our partnerships with the ISPs within the country. And we allow schools to pay for this over a period of time. So this reduces the burden essentially. So we are giving you smart devices, we are giving you the platform, and we are also giving you the internet connectivity to make everything easy and seamless. And you're getting this from one company, one solution. So all the solution is in-house, and the support that goes with this solution also comes through.
Now, one would ask, how affordable are these products and how available are they? How can we actually find them?
Okay. Products are highly affordable because we have a very unique pricing strategy that ensures that every Nigerian will be able to own an ICT device. That is the vision that actually drives Zinox. And products are affordable across our offline retailers and also online through our partnership with Konga. So products can easily be seen in the standard technological markets that you have across the country. In places like Lagos, when you go to the popular Otigba market, Computer Village, you have access to Zinox products. You go online, you go to Konga.com and also Konga retail stores, you can have easy access to our products. We also have wonderful promos and mouth-watering discounts that run all through the year through our various partners.
Now, is there any way educational institutions can actually partner with Zinox to achieve virtual learning, especially at this time when that seems to be the order of the day?
Okay. For institutions to partner with Zinox, they simply just have to send an email to inquiries at Zinox Technologies. They can visit our website and fill up the forms that we have on the website. Once our team receives the information, we contact directly to the schools and have a feel of what is the infrastructure that they have on ground, what is the number of students that we are looking at, what is the number of the faculty, and what are the best means. We also have to check within that environment, what's the best network, looking at the income of people within that range, what is the best device to offer, and also how we can make a plan that is very flexible. So just by coming on to the Zinox website at www.zinoxtechnology.com and reaching out to Zinox, our team of staff will be on hand to interface with the schools. And it's a very seamless process. We can have schools up and running within a week on our virtual platforms.
Now, earlier on, you mentioned that Zinox has, of course, diversified into renewables and electronics. But then, would you tell us what was actually responsible for that move?
While we moved from just a company that was making boxes, which are the laptops and the tablets, we started deploying turnkey projects. A lot of these projects were focused on education. And we deploy a fully built ICT center. The fully built ICT center will have computers and internet connectivity. From our digital network operating center in Lagos, our hub, we were monitoring the internet bandwidth, and we see that during the hours of school time, 8 in the morning to about 4, we were not seeing the bandwidth being utilized. And while conducting different surveys with the schools, the most recurring challenge we had was power, which has been an infrastructure problem that has really plagued Nigeria. So we had to go back to the drawing board, because if people were investing money into creating fully built ICT centers that couldn't be used, full value of the projects could not be seen, and it could not affect and change the lives of the students in the schools, which is our main aim. So we had to sit down. We have a team of over 75 R&D engineers and over 500 field engineers. So we had to sit down and look into ways that we could harness renewable means of energy to ensure that the projects which we were deploying would be able to give value to what they were intended to do. And we decided on solar energy. Nigeria has one of the highest peak sunlight hours within West Africa, getting peak sunlight hours of about 5 to 6 hours daily. So we decided on solar energy, which is what led us to create the first hybrid inverter in Nigeria, which is the high-power solar hybrid inverter. Our inverters range from 1 kVA to 100 kVA, and we can also do deployments of up to 1 megawatts. After creating the inverters, we also had to move to producing the solar cells, which are the monocrystalline or the solar panels that actually harness the power. We further moved down to also creating the batteries because there was a lot of backdraw to people people adopting solar power in the country because of the failure rates that they had experienced with batteries. So we had to put a unique Nigerian blend to the products that we're making to make our batteries more fortified to meet the weather conditions and the unique challenges that Nigeria faces. So we're able to create our high-power hybrid gel batteries that have been able to stand the test of time. So essentially, we moved into renewable energy to solve a problem which we were facing in deploying our projects. And from using those inverters at our project sites, people started asking for them. People also wanted to use them in their industries, in the ministries, in the government space, and also private sector. So that was fully how we went into the renewable sector with our high-power brand of products. For consumer appliances, after Zinox acquired Conga from Conga in 2017, there was a full range, there was a space within that sector that we saw. After looking at the big companies like LG, Samsung Electronics, there were a lot of brands that were coming in from China, coming in through the border, that were not actually living up to their warranty services. You see brands that people will buy and use between a month or two. There were no names to these companies. There was no face to these companies. There was no way to track them down for them to support these products. And we saw this as a problem which Nigerians were facing. And we decided to come up with the high-tech brand of home appliances. And what we did was we created a brand of smart TVs that launched in 2018 that were half the cost of what you get from other brands like Samsung or LG. We launched in 2018 during the Black Friday. We brought in about 50,000 units, and we sold out in less than 2 weeks, which shows that Nigerians are looking for well-priced products that have quality to stand the value of time. So that's essentially what put us into that space. We came in to solve a problem.
Now, having said all of that, Mr. Chukwuma, what certification measures do you have from the local regulators, such as the Standards Organization and the likes?
Yeah. Zinox is an ISO certified company, and our production processes go through the strictest international quality control measures. As you've said, we are partners with Microsoft Corporation. We are partners with Intel Corporation. We are the only platinum partners they have in sub-Saharan Africa. And we're also the first company to deploy the Google Mother Suite for GMS applications for our Android tablets. So our products go to different levels of quality control. We have what we do here in our local assembly plant. Regulators like NIDA come in to check what we are doing through the Ministry of Communication and Digital Economy. We also have the quality control team from Microsoft to come in to look at the laptops and the hardware, and also Intel. We have teams from Google also that come into our production plants to ensure that products that are released are fully met with the best and highest quality standards. So all products that are released from Zinox have gone through full stringent quality control measures.
Research and Development Manager at Zinox, Mr. Onoche Chukwuma, thank you for coming on the program.
Thank you for having me.
But now let's get a review of yesterday's market activities at the Nigerian Stock Exchange, and Edidiong Ewan will be doing that for us. Good morning, Eddie. Over to you.
Good morning, BC. Well, MTN Nigeria single-handedly lifted the market yesterday with its 2.4% gain, and that lifted the market by 0.31% to 25,654.90 points, while the equity cap was higher at 13.407 trillion naira. Now, the volume was higher yesterday as we saw 262.04 million units worth 4.39 billion naira traded in 3,254 deals. I'd like to point out that Zenith Bank was the most traded stock by volume, while MTN Nigeria accounted for about 1.59 billion naira of the total value traded. Now look at this. All the sectors were negative yesterday. Banking was down 0.60%. Consumer goods, industrial goods, insurance, and oil and gas all declined yesterday. So that just goes to show that MTN really lifted the market yesterday. For the oil and gas sector, that was due to the 1.7% decline on O&O. But let's talk to Tajuddin Olayinka, a stockbroker at Valmont Securities. Good morning, Mr. Olayinka. Thank you for joining us on the program. Good morning, Mr. Olayinka. Can you hear me? Okay, I think we've lost Mr. Olayinka there. The unlisted securities market was negative yesterday, and that was due to profit taking, as we had seen that market gain in previous sessions. It was down 0.25% at 727.03 points, while the market cap was at 535.05 billion naira. We saw about 11.14 million units. Now, activity was higher yesterday, worth 22.85 million naira, and all of that was traded in 11 deals. Let's just quickly look at the fixed income market. The bond market was bullish yesterday. It was mixed, but with bullish sentiment as investors were paying attention to the PMA today, where the CBN will be offering about 145 billion naira worth of instruments. But I hear Mr. Olayinka is back with us. Good morning, Mr. Tajuddin Olayinka.
Good morning, Gideon.
Could you just quickly tell us how are traders reacting to the CBN's MPC decision yesterday of lowering rates?
Yeah, well, even prior to that, you will have seen that the last 5 trading days have been, somehow positive. So we expect to see more positive movement, for the time being, even though there are still other issues to be resolved by the CBN. But this step they are taking will surely, move some funds from, the insurance investors like the PFAs and the other key investors in the market to the equity side of the market. So we expect to see, positive movement from that rate cut.
Okay, so yesterday, MTN, lifted the market with its 2.4% gain. Can you tell us what was responsible for that?
In fact, MTN should have even been higher than that. But I think it's just because of the sluggish state of the market or the pensive nature of activities in the market that is bringing it down. It's a communication company, and this is the time that some of them are actually returning good income. So we want to try to see something more positive in MTN and other communication stocks. What happened was not unusual. It's synonymous with the current status of that institution, that company and several other companies in that industry.
Mr. Olayinka, could you just tell us what are the opening calls like this morning in the market?
Market is it's still a bit flat, 0.02% last time I checked, but currently. It's still just a little up. It's about flat for now.
All right, Mr. Olayinka, thank you for your input on the program. Tajuddin Olayinka is a stockbroker at Valmont Securities. Well, we'll leave it there for now. Over to you, BC.
Yes, indeed, DJ, and we'll get back to you in just a moment for the debt and currencies market. Plus, we'll see what's happening in London as well. Please stay with us. It's time now to cross over to the UK, where Juliana Olayinka is standing by to update us on the latest developments, especially regarding the new COVID-19 restrictions. Good morning, Juliana. So, PM Boris Johnson appears to be talking tough about the risk of a second lockdown if the new COVID restrictions do not cut down the virus. But apart from a renewed ban on indoor team sports and stricter rules on mask wearing, what other new measures have been put in place?
Well, there are several things, and I suppose any plans on anybody having a big or moderate size gathering at Christmas or New Year is over. These new restrictions that were outlined yesterday are likely to last for at least 6 months. Yesterday evening at 8 p.m. local time, the Prime Minister Boris Johnson gave what I would describe as a pretty grim address to the nation. It was displayed across most mainstream TV news stations yesterday. Just highlighting that Britain is at a critical juncture. We currently have the worst death toll in Europe of COVID-19, one of the worst death tolls in the world, and the second wave is coming. Cases have been doubling each week, and the virus is spreading expeditiously. We are told that now, yes, so these restrictions could last 6 months. I suppose the main thing, what everybody's talking about in the British press this morning, is that there's been a reversal on the work from home. So now the government are asking people, if you can, to continue working from home. Pubs, bars and restaurants will have to close at 10 p.m. The Prime Minister stipulated that this is not last orders at 10 p.m. At 10 p.m, bars and restaurants must be shut, which means they're probably going to have to start kicking people out by 9. There will be more face coverings everywhere. Wedding ceremonies now will only be able to have 15 people maximum, including yourself and your priest. And we also know that the planned phase of bringing spectators back into those famous football grounds have been scrapped. And so it's pretty serious here. We are at a critical juncture. We have been speaking about this off and on this programme over the past couple of months. But I've got to emphasise to you, Bissy, that the death rate in Britain is really, really high, and people were just starting to think they could get, back to normal. And Boris Johnson did emphasise yesterday that we all know people that haven't taken these restrictions as seriously as they should, and that's part of the reason why we're back in this situation.
Well then, Juliana, business lobby groups are warning that the Prime Minister's U-turn on encouraging office workers back to their desks is extraordinarily reactive and extraordinarily disruptive and risks derailing an already fragile recovery. But what are they suggesting to the PM? We can see that the numbers keep increasing by the day.
Well, there's no silver bullet here. Of course, business leaders won't be happy. Just months after, the hospitality industry is finding its feet, they're told that there are more restrictions. I believe the overwhelming sentiment coming out of business leaders is that workplaces need to be more secure. They want workplaces to be more COVID secure. Boris Johnson did say that workplaces are secure, so they're wondering why now, if they are secure, you're asking people to work from home. There's also lots of talk from the union bosses about PPE, protective equipment, and that there isn't enough going around the workplaces. There have been so many statements, and they're going to keep coming. I'll read just a few of you. Dame Caroline Fairbairn, she's the Director General of the Confederation of British Industry. They represent about 200,000 businesses. She said that these new measures are a crushing blow and that a U-turn on working from home would keep our town and city centres under great economic pressure. Adam Marshall is the Director General of the British Chamber of Commerce, and he said businesses understand that further restrictions are necessary, but these measures will impact business and consumer confidence at a delicate time for the economy. There are several more, but they're all really all part of the same sentiment. However, I've got to tell you, there was a snap poll done yesterday evening with YouGov, and 77% of those who participated here in Britain do back the Prime Minister. So there does seem to be a sentiment that even though business leaders are not happy, the general public understand why Boris Johnson has put in these tough new restrictions.
The governor of the Bank of England, Andrew Bailey, is calling for the government to stop and rethink the furlough scheme, and he's suggesting specific sectors may benefit from further help. But in August, Mr. Bailey had told the BBC that he backed ending the scheme. So why the U-turn now?
Well, I think it's obvious why there's a U-turn. It's because coronavirus is running havoc in the streets of Britain again. And so there has to be a change in tone. As you said, Andrew Bailey had been on the record and he was one of the most senior figures to back the government's decision to end the furlough scheme. The furlough scheme will still come to an end. And even in his comments yesterday to the British Chamber of Commerce, he did understand that that specific broad scheme must come to an end at the end of October. And just to remind our viewers, that is a subsidy scheme so that the government are basically paying people to stay at home. But now, especially with these new curfew restrictions, the hospitality sector is going to be hit particularly hard. Events, nightclubs still haven't even opened. Theatres are still struggling to get people to buy tickets. So there certainly appears to be an urge for the Chancellor Rishi Sunak to relook and rethink that again. Andrew Bailey, when he was speaking yesterday, he did emphasise with the Chancellor, saying it's going to be pretty tough for him, and he doesn't usually get involved in this kind of political back and forth. But clearly, something's got to give, and you know, Britain is in a G5 nation. There is no way they will put in these new restrictions without giving some sort of economic support. That was hinted by Prime Minister yesterday in the House of Commons, and we'll wait to hear from what the Chancellor has to say later in the week.
All right, Juliana, thank you for those updates. And do remember to always stay safe. We'll see you again later.
Thank you, Bessie.
Now let's get back to Eddie Young to review the debt and currencies markets. Back to you, Eddie.
Thank you, BC. Well, let's just quickly look at the bond market, which was bearish yesterday as yields declined as investors were paying attention to the primary market auction today, where the CBN will be offering about 145 billion worth of instruments through 4 reopenings. We had 37 deals on that counter worth 17.67 billion naira. The Nigerian Treasury bills market was mixed yesterday, but activity there was low. We had 8 deals worth 1.66 billion naira, while the OMO market was bullish as yields declined by about 12 basis points. We had 49 deals worth 53.10 billion naira. We saw a lot of demand on the February 2021 maturity. What we saw 11 deals on that counter. But let's talk to Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thanks for joining us on the program. I guess we have lost Chioma there. Well, before we go, we'll just quickly look through other markets. The unlisted securities market was negative yesterday by 0.25% due to profit taking on that counter. The NSI was at 727.03 points, while the market cap was at 535.05 billion naira. We saw 11.14 million units worth 22.85 million naira in 11 deals. Now, the equities market yesterday was single-handedly lifted by MTN Nigeria. We saw the index up 0.31% at 25,654.90 points. We saw about 262.0 million units worth 4.39 billion naira traded in 3,254 deals. Well, I guess we'll have to leave it there on the market review and hope for a profitable trading day as investors still react to the CBN's MPC's decision yesterday.
Absolutely, Eddie Young. Thank you. We'll see you tomorrow. Well, just before we go, let's just do a quick recap of activities at the crude oil market. Of course, prices are down today, and that's coming after an industry group reported a surprise rise in U.S. crude inventories, adding to worries about demand that led to a steep sell-off earlier in the week. We saw Brent crude down 0.5% at about $41.51 a barrel in early trade, and U.S. crude was also down to $39.49 a barrel of course, surging cases of coronavirus infections, as well as the likelihood of more restrictions in Britain, have renewed worries about fuel demand. And that's just as more supply may come into the market from Libya. In the United States, where the death toll from COVID-19 has passed 200,000, which is the world's highest, crude oil inventories rose 691,000 barrels in the week to September 18, and that's coming from industry data, compared with analyst forecasts for a drop of 2.3 million barrels. Meanwhile, official data from the Energy Information Administration is due out later today. We're tracking all of these numbers and will continue to bring you the latest developments as they come in. But that's where we end today's program. Thank you for watching. I am Bisi Adebayo.